starting from like it's starting from basically the basics. So it would be like this is where like obviously structure's different to every person, isn't it? So
Yeah, so there's
that
obviously multiple time frame structures. What I'll do is I'll delete this and some lines just so it don't confuse everybody.
I've noticed George using seconds chart liquidity now recently.
Yeah, well, he
Is
does
that a
that.
new thing? Because I've seen
Uh,
him do it a couple of times,
yeah, kind of. So
which is like obviously really looking for it, isn't it?
yeah, yeah. What he's doing it for is what obviously he's doing it for his obviously POIs, something like this as well. It'd like it to be just above in this as well, I guess, or a
Yeah,
bigger one. Either it don't really matter. It's just an indication of where there's resting orders. So the sort of principle behind it is we believe that obviously the market makers, so the banks or institutions or whatever you want to call them, I believe they have to generate the liquidity. So trend lines, obviously major highs and lows, more so the trend lines though. Um, they have to generate the trap for people to jump in, and then obviously they take them people out, and then that leaves open orders for them to kind of fill, and then obviously go the direction what they want to, kind of thing.
yeah,
Um, so yeah, he's doing lower time frame trend lines for. I'm assuming it's the same reason. Like, obviously, we believe whether it's a obviously this is say this one here is a 4 hour trend line or it'll be visible on the 15, 10, 5, whatever. Um, but when he's viewing them on like the 1 minute and sub 1 minute, the idea is still the same. We still believe it's someone's generating something to be able to move the market. So what 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 I believe it is obviously I just said of the generating orders. I think they've got to come back to. So if we look at this order block that I've got marked here, this orange one, this orange zone, oh, it's been tapped and it's reacted out of. But the reason I believe they come back to the order because they're putting in an order here to take this liquidity. Yeah, so
yeah,
that takes that. Then now they could probably get done for market manipulation. Yeah,
yeah,
if they just keep that order from there and they make hundreds of millions, they can probably get done. But if they don't make any money on that order, they'll get back in at this point, and if they get in here, now this is obviously all pure speculation. I don't actually know.
yeah,
Um, let's say that's number one, that's number two. They can close number one's order at break even, and then they can get back in at number two. They can do the same move often, or as close to, or even further if it's going to continue down. So they still get in. They don't risk fines or prison if they leave this one and close out at break even. Because if you obviously, imagine if you got dragged into the police's office or whatever, financial, uh, whatever you want to call them. Like if they go, well, you think you manipulated here, and you go, well, we didn't make any money, like there's no charge. But then you go, well, but we got in here,
yeah,
you know. So no one goes to jail, kind of thing. No one gets told off. That's my theory on it. So that's why I think they mitigate the order that causes one, but it's all based around obviously mitigating the original order. Yeah, but
yeah.
as long as we get the breaking structure that we're after. So this is why I've got this one marked. So it took that liquidity line here, the trend line. If that is Lucy and she's listening in, I will explain my liquidity as well in a minute. So point of interest is the cause of liquidity intake comes back. From that point, we want to see breaks to the downside. Now we're on the 4 hour. There is possibly a little low down there if we go down on the time frames, something around that area. This would be the lowest low I'd want to be taken to consider buying it to taking a trade, sell trade. I'm not convinced. More down here. This is more convincing if it took this one. Hasn't yet. So, but also that's market open, so still won't be keen. But if price definitely comes and takes this low, so it's tapped in there. So it's tapped in there. If it takes this low here at some point, then I'll turn that brighter so you can see it. If price comes below this, I'm then expecting price to come back up at some point to mitigate something in here. Yeah, because obviously the principle is that something in this is where the order went in to take this low. So we would then aim for something like that to happen.
Can I just ask a quick question? How did you know that was an order? Sorry. Has that
It's
been printed, or have you just seen something?
nah, I've had this map for weeks. Um, so obviously it's an orange box at the minute. I'll turn it blue because I'm going about to draw a imbalance. So visually, right, I'm going to start marking some imbalances just so you can. Where's my magnet? So we've got imbalance there. A little, well, not quite, maybe there. I mean, we're on the 15 minute, but there's possibly some imbalance in there. We've got some little bits up here. We don't really see much above. There's a little bit here that's been filled already by that. Then we've got gaps and stuff up here. So you potentially have a few different little zones marked. So, well, the answer is imbalance. So what imbalance is an injection of a lot of orders into the market. So there's a slow build-up of price in candles. Let me just come up here. It's quite slow up here because we've got lots of wicks going on. I mean, this would have taken a few hours. We get a bit of an impulsive up candle. We get another candle generated. Then we get a big down candle. So this is an indication of a lot of sell orders. So this candle here, let me highlight it. That candle there is on this time frame. This is the order block, and it's what causes this big down candle. So it's basically just the one before the big push. And obviously, the big push is lots of orders, and now you got to think that it takes hundreds of millions of pounds to move to create this candle. So who do we think can afford that kind of money to move the market? The banks, the institutes, and or whatever. So it's a the imbalance is the indication that it might be big players in the market. Now, obviously, what I spoke about is obviously this first one that gets created. If this is what they want to mitigate, then it's going to come back to one or the other, and the banks are going to look into to come back to what they wanted to initially come back to. So obviously we see here it's come back to it, but there's not. Now, if we go back to structure, so at the minute, ignore this one I've drawn here. I'm just going to change time frame so you can see more candles. What I think structure is leading up to the point of interest. So obviously we've got down bearish structure going on here. I'll draw that actually. So I'm just going to pick a point. From there, we get this going on. Yeah. So bearish. I'll say that's 15 minute. I know I'm on the 2 hour, but they're not that far apart. So, but leading up, going upwards to this here. So obviously we get a break up here, which is what George would have been looking at, I think. I'll get to that in a second. But for the other side, so when we turn bullish, so from here we get this. I'll change its color as well in a minute, so you can see the difference in the sides.
It's just a question. Sorry, it's Lauren
Yeah.
speak. That is that sort of like a inverted head and shoulders, the bottom bit before it starts coming back up.
Yes, yes, it is. Yeah, yeah.
So would you
But
always expect to sort of see that move when you're starting to go back up to the upside?
yes, so Head and Shoulders, yes, it is. I think it is does technically meet that criteria. You're going to see it at the top and bottom of every move. Um, you kind of got it here. So there's a shoulder here, a head, possibly a shoulder kind of thing. But it's not quite as simple as head and shoulder. So what what's important is this orange line across here. So this is the low that puts in the high on this relevant structure and time frame. If we're looking for a reversal, which is obviously this is bullish. So if we're looking for the sell, the reversal, we want this to be taken out. So we want candles to come lower, which is what this arrow's that ideally what we would want to see. And then obviously it would create the other shoulder, and we would look to get in up there, somewhere up there. Yeah.
So you just basically waiting for it to play its hand. So if it comes
Yes.
back down and it doesn't take out
Yep.
that area you've marked,
Yep.
and
Yep.
then you just sit on it and wait.
Yes, absolutely. So I believe structure always tells us first which way it's going before I personally will take a trade. And that's what I use structure for. So at the minute, I'm just going to delete a couple of these just to not try and confuse you too much. Ideally, we would see this break below here, and then we'll get a buy from up here because that's what this point of interest is about. So it's tapped my what is it? So it's tapped my point of interest, but I haven't got in yet. So I was confident it was a good POI, but
Yeah.
I'm still waiting. And it all depends on whether it closes below this orange line here. If it doesn't, and we might have seen the move, or we might still see another move. This is the live structure leg at the minute. So this is the low, this is the high. That one there. I'll turn these colours differently. We'll go blue. Blue. So the two blue lines is the current live structure leg, so the high and the low. Obviously, ideally, we'll see a break to the downside, but we might also, it might continue with this. Let me just delete that. We might see a new high going because obviously that's still the current trend. Now,
Yeah.
what will tell us both, what will tell us, sorry, first is inside of this structure coming down here, we get a lower time frame structure formed as well. So from there, we get the high, low, high, low, high, low. Turn that green. Yeah. So we've got a structure forming inside the slightly higher time frame structure. Yeah. So if this one gets broken, that line there, that would tell me that we are due to make a new 50, an orange, the orange structure high, because the lower ones told us it's turning bullish again. If it doesn't take this high here, I'll draw an arrow to which high, that candle there. One, this candle. If it doesn't take this high, I'm assuming this will turn from there and then come down and take this low and possibly this low.
Okay.
So this is why I say this is what I mean though when it kind of tells us what way it's going before it goes. If it takes this high, what I anticipate is obviously I don't know where it's going to turn from, but if it takes this high here, it will do that basically, or something along them lines, and we could buy up from this around this sort of candle here. Yeah, see the big candles forming here, so that might be a place for a buy if it takes that high there. Yeah.
Yeah.
Ultimately, Lee lets structure play out completely before he pinpoints his entries.
Mhm.
But he literally waits for the structure to do all to align for then it to come
Yeah.
back and mitigate what has caused that break. Then effectively, that's what you do, don't you, mate?
Yes, mate. Yeah, yeah. So obviously that's a quick summary on some of the structures. So ideally, what we would, I'm going to tap into George's. I'm just going to delete that as well. I'll uh, I'll just do that so in case people want a screenshot or whatever, or watch it back or whatever it's there. So with the obviously the orange lines are what I class as my 15 minute, and green is usually 1 minute. So and my red arrows are my 4 hour. So ideally what we want is so we've got down here, we've got a huge sort of 4 hour structure somewhere around here. Let's let Tom in.
Sorry, mate. I'm just leaving off my mobile.
Hello, mate. Right, so if I'm fairly confident that's maybe my 4 hour structure, so we get a low, a high, big pullback, doesn't take the low, so we're still 4 hour bullish. There's a big difference between a pullback and say bearish price action. Obviously, this is bullish. So ideally, if you're trying to catch the real big moves, when we pull back deep and don't take the overall low, so this low here where the red line is, that's a 4 hour major low. What we did here was we pulled back roughly 70, maybe even 80%, somewhere around there. Then we started a new 4 hour higher high, so bullish leg, and we're possibly doing this. We've possibly done the same here. So if I was to move that, yeah, we've possibly got similar sort of thing going on, just further up the chart. Um, so what we can obviously it probably looks like I've randomly marked a box here. Obviously, it's tapped this box as well. So I'm going to get to the buy in a second. I've marked that one because there is likely some trendline liquidity. Now we're on the 4 hour. It'll change as I drop through as well through the time frames. Just drop to the 2 hour. We start to see there's some decent sized candles formed here. So there's a bit of imbalance on the 2 hour. It was there on the 4. It looks shite on the 15.
DAX varies so much on the feeds, doesn't it?
Yeah.
Compared to everything else, DAX is just like from one feed to another. It's just varies so much.
Yeah. But I'm guessing there's probably a trend line somewhere that. Well, you magnet on. So we use liquidity as a indication on where the best POIs are likely to be. There you go. So yeah, there. I'm happy with that one. So there's 1 touch, 2 touch, 3 touch, and then this something happens in here that smashes through the trend line. So that goes back to the beginning when I was saying like the points of interest. The better ones basically are the ones that cause liquidity to be taken. So that's the liquidity. This is something in here is what causes the liquidity to be taken. So basically, if we highlight the ones that take liquidity, then these are generally the best places to sort of trade from. So that's why I've marked that one. I can't remember now what time frame I marked it on, but it's kind of irrelevant because all I'm looking for is price to hit it, and then react out of it, and then I'm waiting for further structure breaks to the upside to confirm that yes, it's the right zone kind of thing. um, as we see, it's hit it. So obviously, I drew this structure to the downside, leading up to hitting the point of interest. So from there, that's that there is the high that put in the low, because obviously this is the next previous low. This is the highest point price pulls back after this low. So that's the current high. obviously it's been taken now. If I bar replay it, if price was say there, I'd be waiting for that high to be broken. Once it's broken, we can then start to look for the buys because markets told us it's going up on this structure time frame. So what's basically happened, what I believe, I'm going to get to George's buy. So this high got taken by, there's missing price action because it was the weekend. But once it breaks, the idea is that price is going to come back from somewhere in this low to the candle to the point in which it breaks the high we've got marked. So price could come back in any of this. But like this is my medium time frame. So what George has done, obviously, it's made this low and then it's then taken this high. This is the lower time frame. So orange 15. My 1 minute is my green. So what he's done, he's gone. We've got a structure, a lower time frame structure. Done this, and then we've broken to the upside. Something like that. I'll turn it green. No, I won't alternate blue, so it's a bit easier to see. Yeah, so we get a couple of bearish swings. This, let me just draw. This is what George is hoping his 15-minute time frame is like. So this is basically a continuation of the orange structure. He's hoping that that's happening. Obviously, this is the down. So once this is broken above this candle for George, so if I draw a green or green line from that,
Did it just miss him?
Yeah, by like a couple of pipettes by the look of it. So obviously, it come back. Is that Friday in it? Thursday. 2 hour. So if you was following this trade, we've broken the 15 minutes. Told you it's going higher. The 4 hours. Let me just show you the 4 hour. So we would speculate that we're still bullish. We've pulled back, and we're going to make a new 4 hour high on the red structure. Yeah, it's feasible. This is what caused liquidity to be taken. It took that high, all from this sort of area, possibly. It's come back. It's shown on the 15. You could turn that red, and this could be a 4:15 set up. It's not. So hit it. We've broken then the 15 minutes aligned with bullish, indicating that might be the end of the 4 hour low. And then obviously you can see on the blue, it should be green, but it's hard to see. We then break the 1 minute. So at this point here, where I've frozen the candles of bar replay 2, that's the point where the 15 minute and the 1 minute, all three time frames align with bullish. They've all told me bullish. 1 minute's bullish turn there, 15 turn bullish there, and the 4 hour was bullish. Anyway, it was just in a pullback phase, assuming it goes on to make a new high. Obviously, there's pure speculation at the minute, but the structures are telling me that we are more than likely going to take this high now. And this is the probably, if that point of interest is right, it could still come lower and then do it. But I suspect that this might well be the best opportunity to get in to take this high here, up here, which would be big move. Yeah.
I hope it's an odd number, mate.
Yeah, otherwise I won't be able to take it, mate. But yeah, once that candle broke above there, and I'm going back to the entry sort of side of it. So now I'm just going to drop to the 5. I'll jump straight to the 10-second in a minute. So straight away, we see a huge push from this area. There is possibly liquidity there. That looks pretty bang on. So that would be telling me that our entry should be somewhere in that sort of area vicinity. Now, what I do is, oh, don't want to leave that. I replay because I'm pretty happy that that's somewhere in there is where my entry would be. I'm coming straight down to the 10-second, and I'm looking for somewhere in and around this green box. I'm just going to delete that big one. I'm just going to flick between the 5, 10, and 1.
That is messy on the one, isn't it?
Yeah. But, I mean, I was speaking to Lucy over the weekend. I was trying to explain that, like, I don't believe in like 15-minute imbalances. Now,
Yeah.
this is a good example. So let's get up to current price. So on the 1 minute, obviously it looks like we've got a huge imbalance here. Where's imbalance? So I've had a few drinks today, so right. So on the 1 minute, it just looks like there's just imbalance here. Now, if that's the entry, then you're about on point where it's going to be. But I just want to show you how these change. So let me just show the 15-minute as well. I don't know what that is. Yeah, 15 minutes about the same, so it's not too far off on this occasion. But once we get down to the nitty-gritty of it, now, as you can see, I'll drop to 10 for what I was on. So on the 10, we get a little bit of imbalance here. Now this one's moved up slightly. I'll draw a separate box so you can start to see that they overlap kind of thing and move slightly. On the 10, we have a couple of extra imbalances over rather than this just being the 1 minute. It stays about the same on the 5, but on the 1. So this one here, this imbalance here, it's not there, or it's kind of there actually in it, but there's a little dot there. So there's a tiny bit up here. So obviously, because when it comes to entries, I'm looking for an imbalance to be filled. So on the 10-second, it looks like this is where the entry should be. On the 1 second, you're kind of saying it's there. Maybe up here as well. I mean, this is a huge push. I'm just going to have a flick below because obviously it could be lower as well. But I mean, that one really stands out. So that gets filled. Maybe something going on here. Now, or what I'm doing, and this might be basic, but I'm just literally lining my arrow dots across from this low because all this is obviously covered, so it's irrelevant to me. That taps into there, and then that taps into there. That half fills that, but that's market open anyway, so I don't like it. So I think my entry would be about where we've marked this one anyway. Obviously, that would be I would normally set an alert at this line, and then as soon as that's tagged, that's go find an entry. If that's the one, then that's the one. I'm just gonna delete that off. See, I'd have been just short, but sometimes that might just be a feed issue. I said that higher imbalance looked better, didn't I? So I think I missed it anyway. Stick
Yeah.
on. But I mean that could be a feed issue,
Yeah.
like slightly different. If I went, I mean, this is Pepperstone. If I don't know if FXCM do one or not. So where's the? Obviously, it's tapped into all that there. I'd have always been down here as a minimum. But that basically, if I'll just look to the left actually.
Do you know, like, obviously you're 4 hours bullish, you're 15 minutes bullish, you're one
Yep,
minute bullish, right?
yep,
But then when price comes back to your point of interest,
yes,
obviously on that 1 minute, then that could switch bearish. Like, is that not relevant to how you look at it? Because obviously for it to work back down,
hmm
it's got to break to get down to that level anyway. It would have to break 1 minute structures surely at some point
yes,
anyway.
yes, yeah,
So at that point, your point of interest is still you're still happy to take it based on the previous analysis
yeah,
of it taking
yeah,
highs, taking highs, taking highs.
yeah.
So you're not too fussed if it comes back down. It's creating a bearish, like on the lower time frame. Just that
No,
point of interest is still good. You're not. It doesn't have to. They don't have to be fully aligned throughout the whole process. It's just
no,
gathering the point.
no. So this is kind of a 4-15-1 setup. So obviously that's based on the 4 hour being a direction, whether that's long or short, and then you want the 15 and 1 to line up.
Yeah.
Now, this on this occasion, like this, there's still a market gap uh, up here, you
Yeah.
know, so price could still well and truly come lower because in reality we've got obviously from let me try and find the 15 at least. I mean, this is a decent low here. That one being taken, caused possibly by what I've got marked for the sell, that might drive this to come lower still. But that meets the rules. It just it might sometimes take 2 or 3 stabs at this leg here to get the 1 minute break from. So how I would mark it, I don't think I would have been that high. George's obviously tried taking the buy from there, and it meets the rules, but it's risky because so if we look at this structure leg here, so from the let's say 23rd of March, 17th of April, this leg here, what I would say is generally or ideally we would pull back into the bottom
Good point.
25%, but we've not even reached. So from that, obviously that's the high. We've pulled back 40%,
Yep.
you know, but it's taken a high as well. So anything, all like another, you could look at it and go, well, it's come below this high again. That's what you kind of after it doing. So it just depends. There's because we're looking at obviously the POIs. There could be loads of like trend lines in here, which might indicate that this is the little POI in there that it's actually going to come for and then go take the high. The obviously in a bullish scenario, the higher we take the trade from, the riskier it is because it could come for down here. It could fill this market open gap. It could come for a point of interest lower down. So yeah, on this occasion, it's on the riskier side, but within the rules, which is why you might take 2 or 3 stabs at getting the right one. It just what I would say is, but we can kind of work through that as well. So on the bearish leg to the low being created. So we've got that. We've got the last high internal. So the 1 minute structure basically, obviously orange is 15. We get some bearish swings. This high here gets taken. So we can use lower time frames to eliminate possibly areas that we want. So I'd be quite comfortable in saying that this point of interest here caused that 1 minute high to be taken. Yeah. Huge imbalance then huge push. Caused the internal high to be taken. We'll do a lower, turn it blue. Yeah, so it mitigates that. So I don't think it's coming for that, and there's possibly nothing lower than this that it's coming for because this looks like it's the place that caused that high to be taken. So then we move up to the 15-minute high. So we would say that one or that one. Obviously, that's the next 1 minute high, and that's the overall 15-minute high. Kind of taken by the same thing, and that's where George is traded from. So there's obviously, if you can think about that from a professional sort of perspective, we've eliminated that from this high, the lower time frame high. This what George has done is the cause of the next 1 minute high and 15-minute high both being taken from the same sort of order block. So, but you can if you had this point of interest to the left mark, this red one, that one there that we was looking at earlier, like I say, it caused that liquidity to be taken, took that 4 hour high, as ended up leading to the 4 hour high being taken. So there's multiple opportunities. Now this isn't a 4:15:1 setup. This would be a 4 hour and a 1 minute setup, if you like. So it'd be slightly on the riskier side because you don't know it's gonna take the 4 hour high or 15-minute high if you just wait for the 1 minute. So that blue one would be you just wait for a 1 minute break from the 4 hour point of interest. And you can't obviously if you hold it all that way, oh, it's gonna be fucking mega. But it's risky because you don't know if it's going to take the 15 yet or not, because you'd already be in before it takes the 15. So once price got around here, you'd be like, is it in it? It might come take you out. It might take it and then come and take you out if it wanted to come lower to mitigate. But there's multiple times in the structure, multiple opportunities to get in. Just some are riskier. Like if this is the one, like because it's had the 15-minute break to the upside, and then the one, there's a better chance that it's a safer move if that makes sense. Apart from I don't like how high it is, but structure's telling us, yeah, there's a good chance that that's the one. Is there any questions on that? I feel like I've spoken loads for the last 40 minutes.
That an oat milk spice, it's very spiced latte.
Yeah,
Pump,
soy milk,
pumpkin spiced.
toffee, toffee. I mean, that's not much more better, is it? To be fair, but
Uh,
yeah,
Lucy, by the way, it was just that liquidity thing. Like, when you just literally just saw that and it was like 3 touches and you were like, that's liquid.
yes, yes,
So it was just what you saw. Like, I understand like if it's a 3 touches, but
yeah. Let me just find a better chart. So I think your JPY's got a lot of good examples. Right. So what I'll do is I'll explain what liquidity is, and then obviously I'll explain also how I marking it up kind of thing as well. So some of these look like they've changed slightly. Anyway, so if we focus on this one touch, two touch, turn it a different color as well so it stands out. Turn it orange. So we've got one touch, two touch, three touch. Now I use the magnet feature. So my first and last one stick to the top of the candle, the price high, and then obviously I check for the middle touch. I like my trend lines to be perfect. So if this wick here was a little bit past, I would discontinue it. I wouldn't count it. Won't be happy. I would leave it alone. Purely on the basis that now obviously we're risking our own, obviously if you're self-funded, you're risking your own money. If you're using a funded account, you're still risking your money because you bought the account kind of thing. So I like them to be perfect on the sole basis that if it's perfect, we're not questioning if it's liquidity or not. So if you was happy for things to be real shitty, you could probably just go, well, what's this here? What's going on here? Yeah, that one's short. Like some people go, yeah, that's liquidity, but we're on the 4 hours, so that's probably a good few pips short. me, I would be going, well, I'm not fucking sure if that's liquidity. Yeah, it's nearly 5 pips short. Whereas some people would count it. I'm not. It's not accurate enough. I'm not willing to put my money on ifs and buts. And it's the same if it's the. These have all moved. So I marked all these fucking age ago and it was
Yeah,
perfect.
the feeds changed, didn't they, mate?
Yeah. These was all perfect at some point because that's what I did the videos on. I'll have to check that. Anyway, um, obviously if it's slightly wicked through, I can show you now that a couple of these have gone crappy.
Liquidity is just basically orders that are sat in the market.
Yeah, this one here is wicked through, so that tells me that this isn't a trend line anymore, although it used to be. In FXC, I mean, it fucking about. But why that basically it's just I like the three touch to be perfect because then I'm not second guessing if it's liquidity or not. If you was willing to do, if you was willing to accept that, kind of why wouldn't you accept that then? You know, it just stops the guessing work. Also, so I'm going to go back to who's on DAX, won't we? Before.
Yeah.
So obviously with these structures that are marked previously, so this blue one and the orange one, what we tend to see is when we take a structure high, so this is a structure high, obviously this is a structure low, obviously the orange is my 15. Once the structure high and low, because the structure high and the structure low are liquidity, this is internal, possibly a 1 minute high, but this is a 15 minutes, so it's more powerful because it's a higher time frame than the one below it. So generally, once liquidity is taken, we generally get a pullback. So this high got taken, it gets taken here, it causes a pullback. Obviously, this high then gets taken, eventually taps into something, comes back, causes a pullback. And then we've got equal highs and equal lows. Same again, I like them to be pretty much perfectly level. I'll maybe accept a pipette or two. Anything less, and again, I'd just say, well, if you can accept a pip or two out of level, why wouldn't you accept that too? You know, it's just trying to eliminate the slop out of it, and we don't want to work with guesswork. So they're the three types of liquidity, and basically the only guarantee about liquidity is that we know that price likes to pass beyond it. So when if we take this trend line, for example, just extend it. Yeah. what what it means what I mean when I say price likes to pass beyond it is all that there's a good chance price is going to come past at the point in what it's taken. So that extended, it passes beyond it. It doesn't mean reversal, obviously, because we didn't get a reversal there. We might be getting it now, but it doesn't mean reversal. It doesn't mean continuation because both can happen once liquidity is taken. I don't feel like people understand this enough. What it
Yep.
does mean, though, what we can take from that, sorry, is if we get which way we get our confirmations after liquidity is taken is what is important. So price pass beyond it, don't mean reversal, don't mean continuation. But if we can pick something that caused it to be taken and then we get our confirmations to trade from, then we will do that. So that's what I'm waiting for from here. If we break this low, the sells are on for me. We didn't get the reversal straight away from here because obviously it's possibly happening there. But price, after it took this, it could have reversed straight away. It could have done. Let me just do it further over here. From there, it could have done this. Shit, that's why. Delete that one. Right, from there, we take liquidity. We could have broke above this high that caused it to be taken. That would have signaled buys straight away. Because then it would have broken above here. Then I'd have been looking for a buy out of this. Yeah. So what it does after liquidity determines the direction of which the market's going. which is why liquidity being taken. The only thing we know is it wants to pass beyond it, and then we build our rules and confirmations around what happens afterwards. If that makes sense. Did that make sense?
Yeah.
It will do to you because you're experienced, but
I do have a question in terms of like, because Tom, it's Lauren speaking.
Yeah, no worries. You're right.
But obviously, like we go through it in your sessions and stuff, and with liquidity, you always want to have the minimum of 3 touches. That's what you class as liquidity.
trend line, yes.
Yeah.
Obviously, there's equal lows and equal highs, which is 2.
Yeah, because I think that's what I was going to ask is I know that sometimes Tom in our group people will say, oh, it's left equal highs or equal lows. And I think I'm still trying to get my head around like I can see where it's left them,
Mhm.
but then it's the knowing, okay, what am I looking for? Does it go back to if it's left say equal highs, does that mean that price is gonna effectively come back to take those out?
Yes. Yeah.
And then it would be like this situation where you would
Yeah.
see what the market is doing.
Yeah.
Yeah. This is when you would need. This is when you need to follow the structure, because the problem is equal highs can be left there for just because they're there doesn't mean they're going to get taken like
Straight away. Yeah.
straight away. So that's
Yeah.
that's the $1 million question, really, isn't it?
Yeah. Yeah. Yeah.
You know.
So have you just got to be careful then? So if you've seen it left equal highs or equal lows, don't always presume that, oh, it's going to say to come and take those equal highs and then push
Yes.
higher.
Yeah.
It would put me off if there was equal highs on something and we were close to it. It would put me off. Like for example, if we had equal highs, I'd be put off selling because knowing that there's a chance that price could go through my stop loss to take the equal highs, if that
Yeah.
makes sense. Obviously, if you're in a bullish environment and you've got bullish structure and you're trading towards the equal highs, they are good targets. But yeah, 2 touches for equals is fine. But how Lee looks at his trend line liquidity is 3 touches.
Yeah.
But
Yeah.
it's everywhere in the market. It's everywhere in the market.
Yeah.
Liquidity
Yeah.
is like
Yeah.
literally like the more like you'll see it everywhere.
Yeah.
Once you train your eye to it and you start marking it out, then obviously it does help you a lot. Understanding when liquidity's been taken or looks like it's being aimed for,
Yeah.
obviously really
That
helps
that's what I was
helps you
gonna
helps your
say.
direction of trading.
That's what I was gonna say. So, liquidity is used for now. Obviously, I use this one here to generate my point of interest, and so I can use it for the beginning of setting up a trade. It can also be targets as well. So, if we let me just try and figure out one where there's a target. Um, I don't know. Let's say he was selling from up here, like this. You got confirmations up here, and then this is what tags your entry. Uh, yeah. If you had to sell confirmations from, say, up here and you'd got in here, you can then use it as a target as well because we know it wants to pass beyond it. So obviously all this price action here was created. It could have took it straight away, but it obviously wanted to create conditions for people to get in kind of thing. So yeah, we can use it at the beginning to set up a trade, and we can use it once we're in a trade as a target. So obviously, if you're selling for a B, you'd want it to at least pass. You'd set your trade to at least go beyond this line.
Yeah, because I feel like that's what I've been struggling with. And Tom, I know that I've spoken to you about it as well. It's like I was just getting used to just aiming literally for 2% every time. And
Yeah.
then I feel like when you see other people aiming for bigger targets, it's knowing like where to look and what to aim for is what I'm trying to improve so you can get bigger, bigger
Yeah,
moves. So they're just going, oh, I'm just going to mark this up and aim for 2% every time. It's knowing, oh, I think the trouble is with me, I think I'll set something up and then not really understanding it fully, and then I start seeing it reverse, and that's when I go into a little bit of panic, thinking, is it then going to just reverse and take me out?
Yeah.
This is the thing, like with holding trades as well though, like risk to reward. Risk to reward like makes a massive difference when I know when you're in drawdown it's quite difficult, right?
Yeah.
But risk to reward, like what two trades can literally change your well, the way Lee trades can change his whole month, but can the way I trade, two trades can literally just turn my whole week around immediately
Yeah.
because I'm willing to hold the trades a bit longer, and obviously I do look for liquidity and exits. But sometimes it bites me in the ass. Sometimes it really does. Like, I hold trades past points which I believe it's going to go past, and it doesn't. It just comes back round, and I'm like, you bugger.
Yeah, but I mean that's just trading in it, mate.
Yeah.
I think the worst one I had was Euro GBP the other couple of months back now. I was 47 hour up, I think it was. I mean, target was 48. It took me out. Come and took me out. So
I remember that one.
yeah, it wasn't pleasant that. Fun times that. Sell. It was sell. I think it was. Where the fuck was that? Must have been. Yeah, I think it was this one here, maybe. But anyway, I mean, it's irrelevant in it. That'll be this one, I think. Just shy of my take profit and turn around took me out by like a pip.
Cool
Oh,
that.
yeah, 40. I had it matched for 45. I think it went 48, 44. But I mean, I was adamant it was going lower, so you know, I was slightly wrong by a pip. But yeah, that was great times. That. I mean, I was confident this was going higher as well, mate. So, but in it, and so yeah, I mean, taking losses and getting it wrong, it is what it is, isn't it? Just part and parcel. No. Is there any more questions, guys?
I don't think from me. I think it's just taking it all in. So I have done like a little bit before with like other groups like previously,
Mhm.
with like looking at structure and trying to understand
Yeah,
what voice is doing better. So I had a little bit of a basic understanding that Lucy doesn't really have
yeah.
any, do
I
you?
do. I do.
Well, a little bit. Yeah, yeah, not as probably much at
Yeah.
spotting things as in like which way the market's trying to go and stuff. I think for me it was more like the liquidity and trying to get better at spotting that I need to work on, and like my where to exit
Yeah.
trades and stuff. Um but I don't think I have anything yet. I think it's just it's one of those things, isn't it, where I think like the more you do it and the more you look at the charts, that the easier things will like start to click
Yeah,
into
yeah.
place.
Structure is probably one of the most complex things to
Yeah.
read, but it's also like by far the most important thing you could learn.
Hmm.
But
That'll,
it is the most complex thing because everyone sees it slightly differently. So what Lee might put as a 15-minute high,
yeah.
there might be 200 other people that would have 200 different 15-minute highs. So I mean, sometimes they stand out like a sore thumb, right? But sometimes it's quite subjective. Structure can be
Yeah. Yeah,
on how you perceive it.
but the rules are always the same for me. So I've I'll have to check, but I'm pretty sure in the supply and demand section, if you look in the pinned messages, my rules that I use for structure are in there. If not, I'll post them. But basically, in brief, the so if we look at this orange structure going on here, so once we stop on the high, so we're creating highs and lows here. So this it's hard because so let me just bar replay so I'm not confusing it. Pull back more than 50% just as a guide, but it technically can pull as long as it pulls below the previous structure high in bullish. Obviously, it'd be a structure low for bearish. I'm just trying to think what the rules are now as well. So yeah, this this remains the current structure until price pulls back, obviously below that one, that high there, and then retakes this high. So this is the live high at the minute. Until that gets taken, that's still a high, that's still a low. So price can come in all this and go sideways. It can make internal highs and lows. It can do liquidity. It can do anything it wants. But until that high is retaken, this is still the live structure, and it's bullish, obviously, as you can see. So obviously it's going up. So obviously the anticipation is if it's going to stay that way, it's going to pull back and then create a new high. And until that gets taken, this is the live structure. So it could come all the way back down here, and until it takes that low, it's staying bullish. If it does take the low, then obviously we would then want to see something like that, and then a continuation to the downside. Minimum of sometimes on the lower time frames, like the 1 minute, your structures are going to get really tight, and sometimes you would say 4 or 5 candles is a structure leg. Sometimes it's going to be hundreds of candles, but obviously you always revert back to the live structure is always the live one until the high or the low is taken. So, and then I can't remember the other one. Just bear with me a sec while I try and load it up. The furthest point it pulls back. So if price does pull back that way, and then obviously it takes the high, what we know would confirm this is the new low. Then it goes somewhere around there actually. We know this is the new confirmed low at the point it takes that high as well. So, and that I know this is a lot of information probably as well, but if price started doing stuff like this, it could prat around, it could do what it wants. It could take all them highs, it could come back down. Yeah, until it takes the high, whatever the lowest candle created in all of that from that high being taken, that's the confirmed low at the point it takes the high. So anything in between is nonsense or lower time frame or direction on the lower time frame. And then I think that might be it. Small, yeah, 4 or 5 candles. And then there's one sort of grey area rule where can you hear me, Tom?
Yep.
Oh, it said Zoom wasn't responding then. Popped up on the screen. Yeah, the only grey area rule is what it does next confirms the previous. So that kind of allows for sweeps. So it might take the high and then take the low. Now I'd have to find a example for that because that's gonna blow minds. Try and find one. I have to draw it. Let me move away from charts space. So what it does next confirms the previous. So if we've got bullish price action, if it takes the low and then takes the high again, that this is what it does next, confirms the previous. So obviously we would generally say that's a breaker structure. We would look for sells, but because it then took the high, it just continues, and then we would adjust the structure to suit. So this lower part would stay the same, but from the next previous low, we would just go, that's the structure there, and we would say that this internal pullbacks kind of nonsense because it took the low and then made a new high. We just draw the structure accordingly to what kind of makes sense. So, but that one's difficult. But it allows for sweeps to happen and things. It kind of means it just kind of lets us continue the structure as what it's kind of should be. So yeah, that's kind of structure. But as Tom said, it's there's 4 or 5 rules for it, but it's probably the most difficult thing to actually get your head around. But it means that you can catch major moves because obviously there's a video somewhere I called oil being the new low for.
Lower the fucking century, didn't you?
Yeah, well, I think I said decade in the video, but I'll just quickly show you what I mean because there we go. So it's all just the same thing. So obviously, if we focus on the purple line, that's the overall kind of structure. Obviously, I'm on the weekly at the minute. That's the biggest structure going, and then we can see inside that we have the red structure. So red's my 4 hour, purple's weekly, orange and green are 15 and 1 minute. Now you don't these times aren't specifically to that. It's just kind of the different time frame structures I see. Um, but obviously these lows and things being taken are indicators of if we that part there is bullish, that part of the chart is bearish, and then obviously there is bullish again because we are taking obviously on this down. I'll focus on this down middle section. We take a low, we pull back, create another lower low, we pull back, we create another lower low, then we break this high here. So that one there, turn it red. Yeah, that that high being taken with this price action here indicates that obviously the red structure time frame, so my 4 hour indicates it's bullish at that point, and the obviously the week my weekly basically saying that the weekly bearish price action's done with because it works. So like the 1 minute creates the 15 creates the 4 hour, the 4 hour creates the weekly. So and it works the same. So because the 4 hour makes the weekly, the 15 makes the 4 hour. So if I zoom in here and change the time frame, so I'm just going to jump into this this 4 hour structure here. We can see structures forming on the 15 and 1 minute. I'm just going to come on the 2 so I can fit more candles on the screen now. So if we think we're nearly done with the 4 hour pullback, obviously weekly pullback as well, we can see we start trending downwards here. Yeah. Obviously the 4 hours turn bullish. This is the 15 here. So the 15 told me it was going bullish. As soon as it's 15 here, so that was June. 15 turned bullish in June. And I think it was June, July. I said that this is possibly the low for the next decade at least, unless something major happens in the world. And then obviously it come back, mitigated it. And if we just focus in on that little section there, I'll zoom in. Come and zoom right in. Obviously, we come back to the point of interest that I said's the low for the decade. We don't take the low. We come deep into it. And what we do is we start obviously this green structure here. So we bullish in this little last part here. We come deep into the 15-minute point of interest. We don't take the low. We then take the 1 minute high. And after it takes the 1 minute high, it comes back and mitigates the last little bit of imbalance in there. And then, as we know, it's just gone higher and higher from then. Yeah. Now, I was busy that day, so I'm able to catch this. Well, that's a 1600 R trade.
Your TP would have been the 4 hour high, probably though, yeah.
Well,
Well, with the well, in all honesty, if you was in that trade, knowing the current market conditions, you would have been holding it anyway.
yeah. Well, this is the thing, mate. I'd have been. I mean, this is the 4 hour high here. No, sorry, it was this one here. This one here. So I'd have been at least there or around here, at least there. But I mean, after you'd seen all the, I mean, it smashes the. That's not the high there, is it? It's that one there. Yeah, you'd have been. I mean, I was fairly confident that the weekly structure was the low. Do you know? I was confident because the 4 hour there would told me, um, so that high there's a 15. So I was expecting this. I called this as the new high. I mean, we're three-quarters of the way there. It'd have been a major, major hold, but you know, even if you do it just past it, you're talking 2000 R possibly. I was confident it was doing it. I just didn't actually catch the 1 minute side of it. But whether I'd have held that or not, I don't know. It's like if you risk £1,000 on that alone, like that's over £1.5 million sat in an account. Don't think I'd turn that down. You know,
Would you fuck?
you know. And yeah, I'll just show you the entry as well, just so obviously we spoke about imbalance and things, so I'll just show you the imbalance it filled. I can't remember looking at this to be fair now, so it might look shit and difficult, but is that there then? Is it? No, we can move this. Imbalance there. Cover low. We'll probably cover that to be fair, something like that, but see this push here, big imbalance. Now obviously this is a 10 seconds, so to move that much on a chart is a lot of money. There'd have been a couple of options, maybe. I don't quite like these overlaps, but you kind of get the gist, you know. Yeah. So as long as you're allowed for spreads, huge move. Well, that's only down to structure. Like you've just got a 4 hour break, a 15-minute break here, and then a 1 minute when it comes back low. But to be honest, I think that's a once in a lifetime move. That's like the baby of all moves in it. So, but yeah, I called that months in advance. Just didn't catch it. So, is there any more questions?
No, I don't think I haven't. Have you?
No, I don't think so. I think I understand like it in sections. It's putting it all together.
Yeah, well, I mean, I appreciate that's a lot of information for anybody in.
No, but as in like when you explain like the structures and stuff, I
Yeah,
understand that. And when you explain like the imbalances and the you understand it like in sections,
yeah,
then I think it's like, okay, so if you're looking at the structure, then what do you look at? And then like it's putting it all in the order of what you look at when.
yeah, yeah. So, I mean, I don't mind staying on if you wanted to stay on, and I'll just try and go through it slowly for you.
I don't mind. I feel
Yeah.
like it's all night though. I just don't mind if you're busy.
No,
To be
no,
fair, it's
no.
one of these things where you really have to, you like, yeah, you have to jump on like with the way Lee trades, like his structure. You have to jump on all of his lives, if as many as you can, or watch them back, because he goes over structure on every trade that
Yeah,
he's taken for that week, and you start piecing it together. I mean, look, I'll be totally honest with you. Lee is like reading structure what blows my mind the way he reads it as well. Like, but I have my own way of looking at it, like which is similar. Um, but yeah, Lee's like the king of structure basically, and George.
yeah, yeah. But I taught George, so
Yeah, that's it.
no. Yeah. So I'll just blitz through this one quickly anyway. So obviously obviously we've just gone over the structure high. There's if you're starting at if you're looking at for the big moves, obviously mark your big structures out and work your way down from then. Now, I this looks like a shitty point of interest. I don't know why I marked it like that, but it kind of don't really matter. I'm just picking an area where I want price to maybe react from. Now, the red ones can move. It can mark it exactly how you want it. You can it don't have to be specific because you're waiting for price to tap into it and then show you signs of coming out. So, I mean, obviously, this was a long time ago. I could have marked this point of interest up there and it's blown through, and then I've come back and gone, well, I can just move it down. Ideally, it would be at the point of, say, a wick low and an imbalance being created, something like that. That's lower than that, isn't it? So the higher time frame stuff doesn't have to be exact. It's just a rough area you're kind of looking for, but you want it to have done something. Yeah, and so all these, I'd have been happy because it took this low. There's possibly trend lines elsewhere. I'm not going to spend time looking, but obviously it's hit this red box as we can see further here. Once it's done that, so I would have looked at this because I didn't used to look at UK oil. So there's a US oil, there's a UK oil. I would have looked at this once it had already passed this high here, I'm sure, and that would have really piqued my interest. So it's just hit anything to the left. It's done it, and then it's given me a major reversal signal when it comes above this high here. So with this. Obviously, then I've looked at the higher time frame stuff and the purple and gone, yes, we're in the sort of area for a major buy opportunity because obviously this being taken, which created the point of interest that we're trading from, indicates that the purple structure is continuing with its up price, or I speculate it's continuing with its up price. So once it hits the point of interest and it's shown me the 15-minute is possibly going to go long, so that's at this point here, all I'm doing at that point is I'm just marking a box from, now I'm talking buys, so it would be the opposite for sells, but so I'm marking from the lowest price action to the creation of some imbalance. But what I'm doing is, I'm just going to bar replay sec. I'm doing it at the point in which it breaks the high I'm after being broken. So, and ideally you would be lower. The lower the better. The safer, sorry, not better, because it could revert. It could have gone from somewhere higher. So I'd have had this marked as well at some point, but I've reduced it. Because if we look in here, we've got this lovely big candle here. So market wants to fill imbalance. Imbalance is not natural for the market because it is on this occasion here, it's all sells. And you need to, obviously we call it imbalance because we say it's an imbalance in the market in the way that this is all buys. They need to come back and balance the books, so they need to collect sell orders. So price has got to come in here to get the people to take the sell orders, basically, which is why it's called imbalance. So the once it's come back, obviously, and filled the imbalance, it's probably created liquidity somewhere as well. I'm not going to spend ages and ages marking it, but there is probably a trend line somewhere. It could even be not quite, not accurate enough. But like I say, I'm not going to spend ages marking it because it's liquidity is important, but it's not. I can trade without it because structure tells me, but structure liquidity is a great area to like indicate where you would want to be trading from, if that makes sense. So it might be up there like that. So I don't really know. Yeah, I'm not anyway. Anyway, obviously the important thing is it's come back for the imbalance. It's very low in this leg at the time that the price would have been, say, up here. Obviously, it's come back. It's come very low into this structure leg at the bottom 90%. Obviously, price has come back to it, not taken not taken the low, and then it's shown signs on a lower time frame, so the 1 minute after the 15 minutes turned bullish, price has come back to mitigate something, and then it's shown me the 1 minute as turning bullish as well to line up with the weekly 4 hour and 15. So this break above this candle here, this green line, that for me is my final signal. And then after that, after I've had that final 1 minute structure signal, I'm just looking for a really nice looking imbalance that's going to be filled. Now, order blocks create the imbalance, and I always go for the imbalance being filled because if it's half filled, that tells me that price might want to come back at some point to fill it. So obviously, if your stop loss is before the imbalance is filled, I would say you're being very risky because price might come back to fill it. So once I've had my final confirmation, imbalance being filled. Obviously, I showed you the candles before. As you can see here, it taps it perfectly. Well, it actually just goes past the little thing, but you're allowing for spreads. I always allow for spreads anyway, and a touch more. That's kind of it, really. The only thing I can kind of try and find you is obviously I've just gone through that real briefly and real quickly, but like I say, you can add liquidity into that to try and determine these best areas because if you was you I mean I could have fell for this trap here, so that tapped into the zone I would have been looking for, and then it broke above here, and then it obviously loses. But if you find liquidity that says, let's see if I can find something here actually now. Stick on it. So to me, liquidity is like a tool that could save your losses as well. Attempt to find something now. Bear with me a sec. Don't want to zoom out because it could be that way as well. Day. This is why I don't get bogged down too much on liquidity these days because it's not important to me, but it's kind of is, if that makes sense. Can be. Touch higher. Is right to go for it higher? Touch higher than that. Fucking hell. It's so far away. What the fuck is it? Still. Well, that could be different anyway. Just give me one more go. Because I think it could be this. No, not quite. Oh, what even is life at this point? I think it's on US oil, maybe. I'm sure there's a trend line on one on US oil or this. I just might have deleted it. Now you can spend loads of time obviously marking liquidity. So it might be this. There's a wick there and a wick there. So if obviously you would spot the liquid if that was kind of good enough. It might not be, but you can use liquidity to go say if this was the third touch on a trend line. Obviously, you would maybe thinking, I'm not going to buy from this area because you know price is going to pass beyond the liquidity, if that makes sense. So you can use liquidity to, like as we spoke about earlier, was at the start of a trade or for targets. Now, obviously, I said that um, price wants to pass beyond liquidity, so we can also use it as a extra confirmation. So we'd want it ideally to have been taken before we get into the trade. So, like I say, I wouldn't recommend buying off, say, this zone. I wouldn't have bought off this zone if this was a third touch on a trend line because I would just, like I say, I would just be expecting price to pass beyond the trend line, which obviously it does here. I just can't find the best trend line that I can. Well, that's not to say it's not, there's no there. It's just I'm traveling a long way to try and find a touch. Um, So yeah, liquidity is just a tool, really. Just that we know price wants to pass beyond the point it's taken, and it's possibly a get out of jail free card for the big boys for the manipulation. Yeah, I can't make the trend line. But like I said, it's not that important to me. It just helps me stay out of some bad trades, saves me some losses. It highlights where my points of interest would be as well. You know, obviously, if you look at these trend lines here, you could indicate that obviously something in here caused that trend line to be taken and then it gets mitigated here. You can use it for just as a tool in general to get in, get out, protect yourself from losses. I'll is that okay for you guys? Obviously I can I can do more, but kind of saying the same thing again, I guess.
No, that's fine. That's been really helpful. I haven't really looked at the structure in a
Mhm.
while, so no, that's really helpful. As in how you do it, is in marking up like
Mhm.
on the different time frames. So you've
Yeah,
got the bigger structure and then the
yeah,
little inside it.
yeah.
I think that's really helpful. So yeah,
Yeah. Yeah,
yeah.
like it's really powerful. I'll just give me 2 minutes. And I'll show you because I think USD CHF is one of the cleanest structures I've seen. Um, but there's a lot of boxes to mark. So this is generally the one I use to try and show people like the real nice structures. So I always say that my green makes up my orange and my orange makes up my red. So we can sort of see, obviously, USD CHF is bearish on the my 4 hour. So when I say the 15 makes up orange makes up the red, that's the 15 makes up the four. It's just signals, that's all it is. So obviously we get 15 minutes that make up obviously the 4 hour legs. So the 15 being broken indicates the end of the 4 hour leg, whichever direction that is. And obviously inside the 15 will be the 1 minutes. It's the same what I've just said on for the red and orange. It's the same for the orange and greens. It's just obviously multiple time frame structures running together all in one. It's the same. Obviously, this 4 hour leg is the same as obviously that's what I would class as a 4 hour. The 15 minute is the highs and low peaks inside of the overall leg. It's the same price action. It's just I can spot different structures going on once you use the rules, and then you can use them to your advantage and knowledge to maybe go, there's real big fucking moves coming from here, which is why, like, again, we got the 15-minute break from here. We was high up in the 4 hour leg on this one. Don't take the high. We get a 15-minute break. Obviously, it clears off, does its thing, comes back, does a 1 minute break in this one. So if up here, when we get the 1 minute after the 15 from that area, very high into the structure leg. And then obviously, if you say you target the next 4 hour low, like even just past that 4 hour low after you've had your confirmations, you're like 163-ish R. And obviously, I add liquidity into that just as a sort of a safeguard and an indication. But the structure's the one. It's just, yeah, it just takes a lot of looking at. I think I don't think there's any two ways about it. But like the market is telling us, you know, where it's kind of going before it goes there. So when price was up here and it's shown us these little breaks, the new 4 hour low was always a possibility from this point here where it breaks that green line. Now it took a while to do that and it gave further confirmations. So from that candle there, where I've done it, to actually breaking the low is nearly a year, but obviously it come back, gave a better entry confirmations, and then from the actual entry it gave to breaking the low was just over 2 months. But 163R, you double your 150% on an account if you're risking 1%. Like anyone would take that in 2 months. So
Longest time you've like held a trade?
uh 3.5 weeks mine has been.
You can say 3.5 years then.
Oh no, yeah. No, no.
He's still in gold. He's still in gold from three and a half
Wow.
years ago. Gold buys.
Yeah, now I mean, I think I'm 4 years in now. Yeah, four. I think I'm just about might be 4.5 now, to be fair. But yeah, now obviously, like I didn't get straight into this. Like it took me. I was doing the smart money for like a year or year and a bit, and then after that, I kind of want happy with. It didn't quite explain enough for me. So, as you can probably guess, I like accuracy and precision. So, I basically just went and I was still in TFT while I was doing it, but I kind of spent all my time trying to pick up little bits from everywhere. But I basically just come and did my own thing. I was just looking at charts, and then I started to notice that obviously, if I was to tell you to draw a structure, you're going to draw a zigzag like this, and then you start to think, well, if it's bearish, the selling from the top's the best option, you know. And then you go, well, what's it actually tapping into? And then you realize, well, these are always tapping into the order blocks that create, say, a 10-second imbalance. And then you go, well, if you can take the sell from the highest point, the highest imbalance in a bearish structure in a 4 hour, then like obviously that leads to major moves. But obviously it doesn't always pull this high up. But if you can look in the top, I always say top 25%. So selling from the top 25%, if you can find the imbalance somewhere in that, then you're kind of going to be quids in kind of thing. But obviously it's not just that simple. It's not just go sell high or low. You've got to make sure that your structures are right and telling you the right direction, which is why I then say introduce the 15 minute because that's one below the 4 hour structure. That told us it was going to sell off, and then it was just a case of come and mitigate something, and then a lower time frame confirmation. Then that imbalance, that being filled, that's the point when you get in. At the point that imbalance is filled. Now, obviously, I set limits. Some people might market execute. It's up to you. But but the theory is it's going to come back at that final time to fill that last little imbalance before it goes and does its thing. And like I say, it told us with structure breaks. But structure's hard, so it just needs time and drawing. Like these drawings are on all of my charts. You know, like CAD CHF is the same, bearish. You know, a buy from somewhere down here because we've got. Let me just unmagnet that. A buy from obviously it's come down, mitigated something low in this leg because this would have been the live leg at one point. Come tapped into that, Where's the low? That's the low there. This is the high that puts in this little low on the low slat on the 15. Breaks it there, comes back. We'll give a 1 minute break. So it should have been buying from somewhere in here, and then it's gone on and done its 4 hour. But it's not quite made a new high yet, but it's well on its way. It's the 15 told us that the 4 is going to continue long, and then the 1 minute tells us that it's that's your opportunity to get in, kind of thing. But yeah, like it just tells us. But like, is it GU and EU? They could be. I think GU's coming up slightly. Now we're going to get times where, now, if you look at this purple structure, we are heavily bearish, yeah, but we're in the top 20, top 15% of this orange, orange, not orange, purple structure. So we've got the red structure. That's the 4 hour. That's bullish still, but the time frame above is heavily bearish. So we might get major sells because this purple structure might continue to the downside. So we could, I think it's coming up to this yellow line in this box here. But if it touches that and then shows signals for a sell, we might be able to catch, what was that, 3? That takes that low, basically 4,000 pips. And if you can get a 3 pip entry on that, you know. But this is kind of what it's telling us now. The structure, the orange, sorry, I keep saying orange, red structure might pull back. It might be doing it now. It's pulled back. I'm sorry, that's wrong. Currently there. That's the current red structure. We've pulled back. We've broken to the upside. I was trying to buy this last week or the week before. It's pulled back. It's shown lower time frames bullish again. Breaks to the upside. So I think it's coming there. Now, I would want to see it break below this current low here to then it's going to pull back at some point, and that's the point where I'm going to go, yes, I've had me breaks to the downside on the 4 hour. And then obviously once I get the 1 after that, that's my signal that we'll possibly get. Do want to do that? Yeah, if we come back up and get the 1 minute break to the downside, that's my signal that I think we're coming down there. But we've got to wait for breaks below. Now that's 4 hour, we'll get a 15 in there, so it'll be a smaller break originally. But what will happen up here is the 1 minute will break first, then the 15 will break, then the 4 hour will break, then the weekly will break eventually, if that's what it's going to do. If not, it'll just continue, you know. We might get a 1 minute break, a 15-minute break, but not the 4 again, which means that will happen. We won't break the low, and then we'll just continue making highs. So I'll wait to see if we get bullish signals from down here without breaking the low, and then I'll try and buy it up, and we'll maybe eventually take the weekly high, and then fuck knows where it's going, you know. Probably to fill this, because that's a huge imbalance. So, I mean, that was Brexit vote, I'm guessing 16 in it, so it might want to come for that anyway. But yeah, it's structure what's telling me. If that's the 4 hour low, I want it to come down in here to buy up from there. It might be from a bit higher, but I'll be waiting for signals around there somewhere. But like I said, there was a buy here, and if it goes to the point at which I want it to, that's a 308 R trade. And market told us because it broke above this.
Life changing trades, mate.
Yeah, it's obviously we've got liquidity. We swept it. We broke the 1 minute to the upside here. we've now broken the 15 from this one here. Obviously, that's the high that puts in the low. That's the 15. We've got a 1 minute, an early signal that the 15-minute was going to turn bullish at least for the 15-minute leg. We then broke the 15-minute high. We might have. This might have been the sell here. So we can just use the 1 minute to take trades as well. Once you understand it, you'll start to see that loads of things are possible. So we have that. We get a break above this one here because that's the low, pull back. We retake the low with this one here. We then take the high. This is the mitigation for an entry. So there'd have been something in here that markets come back for. Don't want to do that one. Yeah, because the break to the upside told us it was going up, going to go up again. You know, at that point, draw a line so you can see it. That point there, as soon as that candle there closed above this high here, because that's meets the rules for structure. As soon as that broke above there, we should have all been looking and going, right, there's something low down. The price is coming for. And it's tapped into an imbalance in there somewhere. And then it's bought up. See what it's tapped into, see if we can spot it. Half filled in imbalance, unfortunately. So I would not have caught this.
Didn't it wick through that line?
Nah, I've put that black line on the. I'll just double check that. I'm pretty sure it stuck to the. Yeah, it's just my structure. Yeah, yeah. But I mean, that's what happens sometimes. It's not always going to get. The imbalance tool is the closest thing to perfection that we've got. You know, I mean, what does that look like on the 5 and 10? Yeah, I'd have been. It'd have missed me. Semi there. I don't even know if you'd. Makes no sense. So. Just look at a second. I don't know if you do this at all, Tom, but sometimes, do you know, like you get one candle space, but it's a lot of times passed. So
Yeah.
02, 03, 05.
To be fair, mate, when I get those seconds of them gapped on the 1 second, it fucking loses
Yeah.
me. So I'll just go back to the 5 and the 10.
Yeah, I'm not keen on the 1 to be honest, but if you look at that jumps from 5 to 9, 10, 11, 13, 15, 16, 17, 18. So that changing in where there's like say 4 seconds of skipped thing, that might be 5, 5 to 9, won't it? The fuck, you know that where that 4 second pause is, that looks like that's perfect. You know, it lines up. So there might be something in that to kind of look at, but I don't see this enough to go, yeah, I'm going to backtest that and make sure it's a thing, you know. But I mean, if you did have something like that as an entry, again, obviously I'd have been at least 2.5 pips anyway, maybe. What the fuck is that? Let's say you had a 2.7 pip stop loss and you caught the actual thing, you know. Price told you it was going high, it was going to make a new high. 75 hour trade in day and 7 hours. Market's open now as well. I'm assuming that's still going to continue up because obviously it's probably going to come down in somewhere in this because there's a good chance that that there is what caused the high to the left to be taken. Once it takes the high, it's going to pull back, tap in something it wants to that caused it. It's just going to repeat. This one caused that high to be taken. That's why it's come back and filled that and then made a new high. It's going to do exactly the same somewhere in all this. Below this high, tap in something, go make a new high. That's what it's going to do. Right, I'm going to call it there anyway, guys, because
No worries, mate.
we are well into the night now.
That's been great. Thank you.
No worries,
See you
guys.
in a bit, mate.
If there's any questions from either of you, just give us a shout. I've always got my phone in my hand. So
Perfect. Thank you.
cheers, thank you.
See you
Cheers.
in a bit,
Thanks
mate.
for that.